Thank you for tuning in to another edition of the Vulcan Report. This report is a midday snapshot for Friday, January the 29th. Right now you're looking at a chart of the E-mini S&P 500. As you can see in our last video, we talked about the market testing up to this blue resistance line here, and that's exactly what's happening. I told you that the market should set itself up on Thursday for trading on Friday for the Take Back Friday. Well, today is Take Back Friday. Take Back Friday means that if the market's been down all week, you'll see some profit taking and you'll watch the market retrace as a result. Vice versa, if the market was up all week, it will be down on Friday as profit taking ahead of the weekend. Most people do not want to be long going into the weekend, only because of geopolitical uncertain risk assessments that have been just torturing the markets for some time now. Things normally jump off on the weekends, and particularly Sunday night trading when the futures reopen at 6 p.m. Eastern Standard Time, along with most Forex brokers. So, with that being said, the question now remains, as we start to retrace this bar here, the next retracement bar will be this one. So this, the market attempts to retrace this bar, which was the initial leg of this down move, the next target that comes into play is the 1988.5 level, which is this line here, and then your next one, excuse me, is your long-term trend line of 2009. So the market still has a lot to go, and I suspect that we're going to tap out somewhere around the 1946.5. We'll just round it off and say 1950. Okay, so 1950 is where I'm seeing the market's going to start to peter out, and that'll give us a 50% retracement. We may get up to a 62.8, something like that, percent retracement. Not a lot, but that I'm only gonna give us until here, only because there's so much that's jumping off. Seems like every day. So that's what that is on that one. Now let's take a look on the intraday basis and see how things pan out for the S&P, so you can see where the bids came into the market. All right, see, we've had a progressive, all but wild movement here. Okay, here we broke out right here, so this is still the initial leg of this breakout, and the question is going to remain: can it sustain it? And like I point out to you, I just don't see it. There's too much going on in the markets, too much technical damage. I think this bull market died a long time ago, and the bear, long live the bear. So that's this one. Let's take a look at what's happening in the silver market so you can get an idea of that one. Okay, let's see here. Alright, as you can see, silver made a run toward the white dot here, which is that resistance line of 1458, and the market's trying desperately to push it and get up to 15. It appears it's going to take a little bit longer for this market to try to do something. It's trying to form a base, as we've been doing here for the last several weeks. It's trying to put in a bottom so we can make that run up toward the Kumo cloud here of that $15, $16. And then you see $16 is setting up to be the long-term resistance going forward once we can close above the cloud. So that's what I see still in play in the silver. As for the gold, pretty much the same story. Let me just make this bigger. Okay, you can see here also nice base. Now the market's making a run. It's going to have some resistance at 1142, and as you can see, it's struggling right now because of this resistance over here of 1142.7. So it's trying to do something, and right now so far we hit 1128.7. So market's taking a little bit of a breather. It's up about $2 now, but it's trying. And again, 1200 should be their strong support for the new bull market. Once the market can get there, it may take several more weeks to get up there, but that is the target where we're headed right now within the next 6 to 12 months in the gold and the silver. Finally, let's take a look at the crude oil. Crude oil right now is right here at nice little breakout here. It's trying to do something. We did high of 34.40 today. Right now we're at 33.60. Market's trying to recuperate from that 27.57 handle you see here. So that's quite a run. That's an $8 move basically. that's bizarre, $7-8 move off the low in a week's time, which is just bananas. Long way to go here. It's trying to make a run here toward the long-term resistance line of 38.70. Then it's going to hit resistance at 42.94 and 49.09 here, respectively, as it hits its head at the bottom of the cumulo cloud, and it should fail, as I showed you before. Let's go back. It's just maintained just a nice, smooth sell-off ever since we came down and collapsed from the cumulo cloud. We haven't even attempted to test the cumulo cloud since we've come down here. Nowhere near it. Look at that, just straight down. So this market has a lot to prove going forward. Again, I think initially the market's going to try to get back up to $40 a barrel, but it's probably going to have a lot of rough time once it gets there. The last time it tested the trend line was back here in October the 5th of 2015. Couldn't hold it, and we collapsed back down. So I suspect the same thing again. We'll get back up to the trend line resistance, and then the market will be sold hard. Going forward into the new week, I see a test. The market wants to try to get back up to the trend line resistance and the oil, so we'll have to watch for that. Another interesting one to watch here is the dollar. Let's pull this one up. Alright, the dollar is still bullish, as you can see here. The problem though is, the reason why we're stalling a bit is because the trend line is inside the cumulo cloud. The cumulo cloud is a cumulo cloud of death. Those of you who follow me know what I've taught you about the cumulo cloud. It's the cloud of indecision, the cloud of death, when the markets grind and whipsaw around until they can decide what they want to do. Well, this trend line is in the cloud. Alright, so it's saying that the trend is slowing down, taking a breather. Markets, the trend is still intact, but the market's not trending. We're not hitting any new highs. Okay, last high was here. This was a head fake to take out this high here of par 25, and then we hit par 60 and then just collapsed. Okay, now the market's trying to make a run back up to par. If the market can get up to par, it may try to go to 101, 102. We don't know if it has enough energy to do that yet. We'll have to wait and see. There still could be further retracement if this trend line can't get out the cloud, for number one. Also, this short-term moving average is losing some momentum as well. So we're going to have to wait and see what this market does. So that's all we have now for the intraday snapshot. Just want to let you see what's going on with the markets, and we'll see what can happen. Anything goes. It is Friday, so anything goes. We've seen this week where the markets the Dow can be up 200 points and then give it all back up and be down 200 points. So we'll see what happens. Anyway, take what you can and give nothing back.